This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Well, now let's take a look again at the gold market. Well, yesterday we said that the gold market is a bit contradictive action, because from the one point of view market could continue move down, because that is just a normal retracement up to the completion point of the ABCD pattern from this ABCD on the 4-hour time frame chart. We have discussed it. From the another point of view, market has returned right back in the range of this huge upward candle. That could be the sign that very often market returns right back to the upper body of this range if this happens. Well, that's why we said yesterday that it's better to wait a bit, because currently market is nervous. There's nothing clear with the US government. We will not talk about the fundamentals today, because we have discussed the major thoughts yesterday. Today just could be some rising of the volatility around the time of the when the usually non-farm payrolls release should appear, but today we hardly will see these numbers, because the Department of Labor just doesn't have currently enough employees at work who could calculate statistics and release it. Well, that's why probably today we will not get the numbers, but the volatility around this time could appear on any financial markets. That could happen. And yesterday we said that it's better to not deal with this action that now stands on the intraday charts, because we do not have something more valuable that we could stick with. Yesterday you could see that market in fact has formed the inside day, that was inside trading session to this candle. Now there's also small range just yet, but today we could get something more valuable, and that could become the bearish stop grabber pattern on the daily time frame. So if market will form it, in this case we probably could think about taking the short position, because the minimum target of this pattern will be right here, these lows. And as we said, and if market will returns right back to these lows and will take out these lows, that will be the challenge for deeper action to the downside. That could be the challenge for at minimum this area. It's 1235, because this will be ABCD target, probably around 6768 minor fib support. But also that could become the challenge for deeper move right to the previous lows, because that is really a strong area of support. And if market will pass for the monthly pivot support 1 for the major 618, it's very probable that market will continue to move lower. And that move could start from this stop grabber pattern. But even if we will get a stop grabber and market will just take out of these lows, that will be not small move. That's about $30 per contract. That is really significant. Well, that's why I think that it's better to not deal with any intraday charts price action on Friday, but just wait what market will tell us with this stop grabber. If we will get it, well, that will make all things simpler, and we will try to stick with this pattern, because in fact this is the single pattern, the only pattern that we have currently on the gold market. Well, on the intraday charts, we have the action. You can see market has tested this confluence that we have discussed previously once. That has happened yesterday again. Now market is calling right inside of this confluence resistance and is forming something that could give us the butterfly pattern. Well, but personally I wouldn't bet on this butterfly, because I do not see much sense with the trying to dealing with this pattern prior to situation with the stop grabber will be resolved. Because the dealing with the daily stop grabber is safer, and it has the much more attractive risk-reward ratio, and in general it's more reliable pattern than just this some hint on this potential butterfly on Friday. So think by yourself, but this pattern is here could appear. This target 127 is 1330, is approximately the 50% resistance of the whole swing down level, right between the 618 and 38 resistance. And the 1618 stands in agreement with the 618 resistance around 1337. Well, I can't exclude that market maybe will form this butterfly and so on, but personally I do not want to deal with it today. For me, it's better to wait when the market will resolve the situation with this potential stop grabber pattern. So make your choice and be aware of the possible volatility growing right around the time when usually the non-farm payrolls release.